In this video, we will analyze the recent performance of small caps, gold stocks, the S&P 500 index, international funds, and other market indicators. We will also discuss the current market sentiment and provide insights into the potential impact of economic reports. Please note that the information provided is based on chart analysis and does not constitute financial advice. Small cap chart analysis. Last week, small caps experienced a significant sell-off, losing almost 11% in 1 month. The sector was down 3.78% last week but showed a slight recovery of 0.51% this week. The MACD indicator suggests a bearish trend in both the daily and weekly charts. Additionally, small caps dropped below their 200-day average line, indicating a bearish divergence compared to big caps in the S&P 500 index. As a result, the strategy for small caps is bearish, recommending a position in cash, money market funds. Ridex Precious Metals Fund, RYPMX chart analysis. Gold stocks broke lower this week, dropping 6.24% and falling below their 2023 lows. They are also below their 50-day and 200-day average lines. With the US dollar rallying, it is not advisable to risk a bullish trade in gold stocks. Due to their high volatility, gold stocks should only constitute a small part of any portfolio. S&P 500 Index SPX, long-term, chart analysis. The S&P 500 Index experienced a downside breakout last week, losing 2.93%. This week, it traded below but did not close below its Wave 4 high, which serves as support at SPX 4,280. The conservative strategy for the S&P 500 Index aims to protect investors from bear markets and does not make changes based on emotions or news events. Currently, the strategy is in a bullish position, holding the Ridex S&P 500 Nova Fund, RYNVX, or other S&P 500 index funds or ETFs. International funds chart analysis. International stocks broke below their 200-day average line last week and continue to decline this week, falling 1.40%. The 50-day line remains above the 200-day average line. There is a pattern of short declines followed by rallies throughout 2023. As a result, the strategy for international funds is bearish, recommending a position in cash, money market funds. S&P 500 Index, SPX, and current chart analysis. Investors are currently experiencing extreme fear, with concerns about a potential government shutdown and market decline. The CNN Extreme Fear Indicator was triggered, reflecting a reading of extreme fear for the first time since March 15. However, contrarian investors may see this as a potential bottom, as extreme fear often leads to reduced selling pressure and oversold conditions. It is important to note that the S&P 500 index reversed lower after reaching resistance at SPX 4,330, indicating a bearish sentiment. The index is now below support at 4,450 in its 50-day average line. Market indicators. The CBOE Volatility Index, VIX, rose this week, reflecting anxious traders buying insurance from the options market. However, the current level of VIX, 17.52, is still relatively low considering the amount of selling in the market. The percent of NYSE stocks trading above their 200-day averages closed below its 200-day and 50-day average lines, indicating a month of selling. The Investors' Intelligence Sentiment Indicator shows a high number of bulls, suggesting a potential market top. Market-moving economic reports. Several economic reports were released this week, including the Chicago Fed National Activity Index, sales of new single-family houses, S&P CoreLogic Case Shiller 20 City Home Price Index, new orders for manufactured durable goods, average contract interest rate for 30-year fixed-rate mortgages, and unemployment benefits filings. These reports provide insights into the current state of the economy and may impact market sentiment. Conclusion. Based on the analysis of small caps, gold stocks, the S&P 500 index, international funds, and market indicators, it is recommended to adopt a bearish stance for small caps and international funds, while maintaining a bullish position for the S&P 500 index. The market sentiment is currently driven by extreme fear, but contrarian investors may see this as a potential bottom. Economic reports released this week provide additional context for market conditions. As always, it is important to conduct thorough research and consult with a financial advisor before making any investment decisions. As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.